Hello, and welcome to the Forexer YouTube channel. In this video, I would like to introduce you to the concept of smart money and how it can help you in your trading. Smart money refers to the large institutional investors, such as banks, hedge funds, and other financial institutions who have access to significant resources and information. By analyzing the behavior of smart money, traders can gain insight into market trends and make more informed trading decisions. Today, I will be introducing you to the concept of smart money and how you can use it to improve your trading. Before even starting your session, always look at Forex Factory for any red folders concerning EUR or USD pairs. If there is a red folder, trade before or after the news event. Do not hold your trade during the news release. Dear subscribers, I want to introduce you to the smart money trading strategy, which consists of 4 main steps. In step 1, we look at the H4 daily demand supply. In step 2, we use the 15 time frame to identify unmitigated supply and demand zones. Step 3 involves refining the unmitigated supply-demand zones using the M5 time frame. Finally, in step 4, we use 3 different entry types during our trading session. I hope this smart money strategy will be useful for your trading endeavors. What is an uptrend and a downtrend? I know many of you know this, but it's good to remember. In Forex trading, an uptrend is characterized by a series of higher highs and higher lows on a price chart. The higher highs refer to peaks in the price that are higher than the previous peaks, while the higher lows refer to troughs in the price that are higher than the previous troughs. These peaks and troughs can be thought of as ceilings and floors, respectively, that the price is moving between as it trends upwards. Conversely, a downtrend is characterized by a series of lower highs and lower lows on a price chart. The lower highs refer to peaks in the price that are lower than the previous peaks, while the lower lows refer to troughs in the price that are lower than the previous troughs. Again, these peaks and troughs can be thought of as ceilings and floors, respectively, that the price is moving between as it trends downwards. These levels of support and resistance, represented by the floors and ceilings, are important for traders as they indicate potential levels where the price may reverse or continue its trend. When the price approaches a ceiling or a level of resistance during an uptrend, traders may look for a potential reversal or correction, while during a downtrend, traders may look for a potential reversal or continuation of the trend when the price approaches a floor or level of support. Step 1. Look at 4 daily demand supply. We do not care about structure in this strategy. We simply care about whether supply or demand is in control, and if price reacts to the zones. Overall, these zones on the H4 or daily will only matter for reactions on the smaller time frames. We do not wait for these poised to get hit to enter a trade. Remember, a simple reaction on 4 or daily zones can give us 100 trades on the 1 time frame. Step 2. Use M15 time frame for unmitigated supply and demand zones. Step 3. Use M5 to refine your M15 unmitigated supply-demand zones. If possible, refine even till M2. This all depends on how clean the zones are. If you go from 5 to money and it now gives you 2 unmitigated zones, then keep it to the M5. However, if it gives you 2 zones, but one has been mitigated, go for the most recent zone that has not been mitigated yet. The fact that this zone comes from a mitigation makes it a higher probability zone. I like full body candles or wicks for supply-demand zones. If I cannot find one of these 2, I'll go up or down in time frames to find the perfect fit. Once you have successfully annotated your H4 daily zones and your refined M15 zones, we can switch to the MON time frame and wait for our session to start. Step 4. There are 3 different entry types I use in this strategy during my session. 1. Flips demand to supply flip. If price reaches into your unmitigated demand zone and reacts, you'll be waiting for a break of demand in order to look for shorts. Does this mean it needs to break the whole zone? No. If demand was strong, it would have an immediate reaction and provide you with a choke to the upside breaking supply levels that provided the temporary downtrend, however. If supply breaks your unmitigated demand level or the most recent demand level, or the most recent demand, we have a strong indication that supply is in control. So we can take the trade from the supply that caused the break. In this image, we can see the price reaction to the reduced M15 area. How did we get into a sell before the price broke the zone? It's very simple. If this demand was strong, it would react strongly and break new supply levels. Instead, we've seen a flip that shows demand is weak and supply is back in check. We get an input in the OB or supply region that caused the flip. Supply to demand flip. If price reaches into your unmitigated supply zones, you have marked up you will be waiting for a break of supply. We can see that price has technically broken our undeclining supply zone. However, it broke our partial supply, indicating that supply is not at all strong at this level. If our main supply was strong, the price would react and lower. Since demand broke its partial supply, we can trade on our demand, which caused the break. Continuations are very simple and my favorite way to stack orders. Once again, we do not care about structure. All we care about is a break of the most recent minor supply or demand. Your entry will be from what caused the break. Ideally, you'll look for full body candles. If you cannot find them, feel free to go up to the Me Too and 3 time frame. Inside, bars are very helpful for it as well. Since price broke our minor supply, we can place an entry from what caused the break. Change of character is basically a change in trend. For me, the ideal setup is to have a chotch that breaks 2 minor supply or demand zones. Although a chotch could be valid if it breaks one zone, I find it more reliable if it reacts from a hate F zone and breaks 2 minor supply demand zones. In this schematic, you can see that demand has broken 2 minor supply levels. This is a chotch. Could you place an order on the play? Only if the pullback does not come from an unmitigated supply zone. If price does come from an unmitigated supply zone, wait for a confirmation entry. If you're a fan of the Forexer YouTube channel and enjoy the valuable insights and educational content provided by their team of experts, consider showing your support by subscribing to the channel, liking and sharing their videos, and leaving comments with your feedback and questions. By supporting Forexer, you're helping to ensure that they can continue to produce high-quality educational content that helps traders of all levels learn about the complexities of the financial markets. Whether you're a beginner, just getting started, or an experienced trader looking to sharpen your skills, Forexer's videos can provide you with the knowledge and tools you need to make informed trading decisions and achieve your financial goals. So, if you find value in the educational content provided by Forexer, take a moment to show your support and help spread the word to others who may benefit from their expertise. Thank you for supporting the Forexer YouTube channel. No matter what entry type I have shown, if your pullback comes from an unmitigated zone, you cannot place a limit order. Never. You would have to wait for a new flip and let the market show its hands. Now, you know if price is creating engineered liquidity or not. You will not be confused about being on the side of the market, and you will avoid unnecessary losses. In this example, we have a supply setup, but price is pulling back from an unmitigated demand zone. Even though we are in a major downtrend, we can simply not put our sell limit because demand is in control. The only way to be able to place a limit order without worrying if our zone will hold or not without waiting for flips or choke is if our initial zone broke structure, but also its pullback is not coming from an unmitigated zone. Below will be displayed both scenarios in which you can take a limit. Price trade through the unmitigated M5 demand zone. Price did not reach the unmitigated M5 demand zone, indicating a healthy pullback from which we can take a short. Trading Plan Checklist. 1. Markup H for daily demand supply zones. Is price reaching and reacting to the zone? We do not care about this time frame unless price is reacting from one of the zones. 2. Markup all M15 unmitigated supply-demand zones. 3. Use the MI5 to refine the same unmitigated zone. If possible and not confusing, refine it down to the EE, smallest time frame possible. MUM4, EM3 MUT1. 1. If your refinement gives you more than one obvious unmitigated zone, go back up to the time frame which provides one clear. 2. Use clear wicks or full body candles. Order blocks. 4. Pay attention to price on Monet and look at price when it reaches or is reacting from one of your unmitigated zones. Entry types. 1. Ds, C, flips, S2. Continuations. 3. Shotch. 5. Target next unmitigated supply or demand zone. Obvious double tops, bottoms, trendline liquidity. If you find the content on Forexer channel helpful or informative, please consider showing your support by liking and commenting on their videos. This helps the channel grow and reach more people who can benefit from the information. Sharing this video with your friends and fellow traders is a great way to help spread valuable information. Don't hesitate to share it on social media or with anyone who you think might find it useful. Your feedback is always appreciated, so please feel free to leave a comment with any questions, thoughts, or suggestions you have. The Forexer team is always looking to improve and provide the best possible content for their viewers. By supporting Forexer, you're not only helping the channel, but also contributing to the wider trading community. So please take a moment to show your support and help spread the word.